Imagine walking into a bank, sitting across from a loan officer, and watching their entire demeanor shift the moment they pull up your credit file. No hesitation, no awkward pauses, just a nod, a smile, and the words, "You qualify for our best rate." That is the power of an 800 plus FICO score. And here is the truth that the financial industry does not exactly advertise. You do not need decades of perfect financial behavior to get there. In fact, there is one completely legal strategy that has helped thousands of Americans vault their credit scores by 100, 150, even 200 points in as little as 90 days. It is called the Authorized User Tradeline Strategy, and by the time this video is over, you are going to understand exactly how it works, why it works, and how to use it to completely transform your financial identity. Before we get into the strategy itself, let us talk about what a FICO score actually is and why the difference between a 650 and an 800 plus score is not just a number, it is a financial universe away. Your FICO score is calculated using 5 core factors. Payment history makes up 35% of your score, which is the biggest single piece. Credit utilization accounts for 30%. The length of your credit history contributes 15%. Your credit mix makes up 10%, and new credit inquiries round it out at the final 10%. When your score sits at 650, lenders see you as a moderate risk. You will get approved for things, but you will pay for it through higher interest rates on mortgages, auto loans, and personal credit lines. A 650 score on a 30-year mortgage could cost you tens of thousands of dollars more over the life of the loan compared to someone sitting at 800. But when you cross that 800 threshold, you enter a completely different conversation, one where lenders compete for your business. So what exactly is an authorized user trade line? And why is it the fastest legal shortcut in the credit score game? Here is the core concept. When someone adds you as an authorized user to their credit card account, that card's entire history, its age, its payment record, and its credit limit gets reported to the 3 major credit bureaus under your name as well. You become a beneficiary of that account's positive history without ever having made a single payment on it yourself. The key word here is trade line. In credit terminology, a trade line simply refers to any account that appears on your credit report. And when you are added as an authorized user to a trade line with a long, clean history and a high credit limit, your credit profile absorbs that positive data almost immediately. For most people, that reporting update hits within 30 to 45 days of being added, and the score impact can be dramatic. Now, here is where it gets interesting and where most people get tripped up by misinformation. There are 2 ways to access authorized user trade lines. The first is through people you already know. A family member, a spouse, a close friend who has a credit card that is at least 2 or 3 years old, has no late payments, and carries a low balance relative to its credit limit. If you can get a family member or trusted person to add you to one of those accounts, you gain all of that account's history on your report for free. You do not need to carry the physical card. You do not even need to use it. Simply being listed as an authorized user is enough for the bureaus to register that account under your credit profile. The card's age contributes to your average account age, lifting that 15% weighted length of history factor. The clean payment record strengthens your payment history factor. And if the card has a high limit and a low balance, it even lowers your overall credit utilization ratio, which remember is 30% of your score. The second method is through the paid trade line industry. And this is where you need to proceed with both ambition and caution. There are legitimate companies that connect people who want to rent out their age trade lines with consumers who want to be added as authorized users for a fee. These services are legal. The IRS does not classify it as taxable income for the renter, and the practice does not violate any federal law. However, the space is also riddled with scams and predatory operators. If you go this route, you need to vet the company carefully, ensure they work with accounts that report to all 3 bureaus, Experian, Equifax, and TransUnion, and make sure there is a money-back guarantee if the trade line does not post. A legitimate trade line rental can cost anywhere from $100 to $500 depending on the age and limit of the account, but the ROI on your borrowing power can dwarf that investment many times over. Now let us talk about the 90-day roadmap, because the authorized trade line strategy works fastest when it is layered with a few other high-impact moves happening simultaneously. In the first 30 days, your primary mission is to get added to one or two strong authorized user accounts and to pull your credit reports from all three bureaus at annualcreditreport.com. Comb through every line item for errors, wrong account statuses, incorrect balances, accounts that do not belong to you. The Consumer Financial Protection Bureau estimates that 1 in 5 Americans has at least one error on their credit report, and disputing those errors can alone produce meaningful score gains. File disputes directly with the Bureau, reporting the error and document everything. During days 31 through 60, your focus shifts to your utilization ratio. Even if you cannot pay down large balances overnight, you can request credit limit increases on your existing cards. Most issuers allow this once every 6 to 12 months, and a higher limit with the same balance instantly lowers your utilization percentage. A utilization ratio below 10% is the sweet spot for elite scoring territory. If you have any charged-off accounts or small collections under $1,000, this is also the window to negotiate pay-for-delete agreements, where the creditor agrees to remove the account from your report entirely in exchange for payment. Not every creditor will agree, but many will, especially for older debts. In the final stretch from day 60 to day 90, your job is to let the system catch up to the work you have done. The trade lines you were added to should be fully reporting by now. Your disputes should be resolved. Your utilization should be optimized. What you do not want to do during this phase is apply for new credit, because each hard inquiry can temporarily ding your score by up to 5 points, and multiple inquiries signal desperation to lenders. This is the patient phase, and patience here pays off in a very literal financial sense. Here is the bottom line. Your credit score is not a permanent verdict on your financial character. It is a dynamic, living calculation that responds to real data in near real time. The authorized user trade line strategy works because it gives the FICO algorithm exactly what it rewards: aged accounts, perfect payment history, and low utilization. And it does so in a compressed timeline that traditional credit building simply cannot match. Combine it with dispute removal, strategic utilization management, and a freeze on new inquiries, and 90 days from now, you could be looking at a credit profile that opens doors you did not even know were available to you. Your 800-plus score is not a dream on the distant horizon. It is a process. It is a plan. And now you have both.